this video, I'm going to be going over how to find A+ setups, how to find draws and liquidity, and really dial in, finding a good trade for the day, not over leveraging, and all that good stuff. So let's get into it. And Lou, if you're watching this one specifically for you, I see you're having trouble over leveraging, blowing your accounts, and all that good stuff. But let's get into it. This is specifically for Tuesday, April 14th. Right now it's 8 a.m. And we're going to do a top-down analysis. So what that means is we're going to start from a higher time frame, going lower, and try to get a bias or feel of what the market wants to do. So yeah, we're going to start daily, 4-hour, and just slowly chip away at price. So we want to start off looking for higher time frame draws. So we have one here on the daily, and another one up here, and here. I'm just going to do this one because this one is a little wicky. This one's cool. There's the probability of us hitting these higher time frame draws in a day is really unlikely. It's just for us to get an idea of what price wants to do. Okay, so we have a lower draw kind of right here and one way down here. There's also one right here, but yeah, that one's all right. So moving on, we're going to go to the 4-hour. And right off the bat, we have this massive 4-hour gap right here. Okay? Huge 4-hour gap. And this is cool and all, but what's more important is this draw right here. That's way more important than that 4-hour gap. Why? Well, this tapped into this 4-hour gap, and in order for us to go lower into this gap, we have to take out this draw. So this is more important to have on your screen than this huge fair value gap that would take up like a lot of clutter on the screen. Like, we don't need that. Okay, so moving forward, there's also a 4-hour gap above. Right? We got one right here. And there's another one right in here. I don't necessarily want to mark this one because we're already trading up into it, so it's not as important than the one right here. Okay, next off we have lower draws right in here. We have these little guys. And that's kind of it. Going down to the 1-hour, we're just going to do the same thing over and over and over again. So now we have New York low. We have London. We have Asia. So I'm going to move this to Asia. And that's kind of it. This, I guess we can change to Asia. Yeah, Asia. And then some more internal draws from overnight. And so now we're moving into open for today. All right, we have Asia, London, open for New York. That's already played out. And some previous day draws below. And so what we want to look for is where can I enter in to target either one of these draws or higher time frame gap above. And so that's when we go down to a lower time frame and find either a 5 or 15-minute gap. And so we can see that this draw had already gotten taken out from this 6:30 open candle, so we don't need that. And so the next thing we can do is mark out London low. So we have London draw, and then we have New York low. Okay, so then moving forward, we have a 15-minute gap right here, which is really important. So that we'll just bring out a little bit. So 15-minute gap. So if price does want to break that to seek lower, we're going to enter in off of this, kind of something like this, stop usually at the high or a little bit above, so we can do like the London high right here, and then we'll just target the low. I like to put mine at the high or relevant draw, only because if price wants to reverse like say it breaks below and then it wants to reverse and break back above that gap, then the trade's just not valid anymore. I will also go to a lower time frame and I'll try to identify any gaps that price might want to seek out on the way back up. But for me, this looks like a good spot. See, there is like this 1 minute gap. But these gaps could also just get taken out on the way down, which means it's invalid. So moving forward, how do we identify a good setup? Well, it's important to note that we don't really want to enter a trade until key levels of liquidity have been taken out. So for instance, this morning we want to wait for London high to get taken out before anything. So London high got taken out right here, huge sweep down to then reverse back up. And then it was kind of just chopping around because buyers and sellers were unsure where they wanted to go. Tap back into the gap, not once but twice. And then that's where I decided to enter in a long off of the 1 minute break to higher. Right, I took a long right here, 1 minute gap higher. Not only was it a 1 minute gap, but it was also a CISD off of this high right here. So CISD change in a state of delivery of what price action is doing. Not only was it a CISD with this candle close, we were putting in a higher high, or higher low, higher low, higher low again right here based off of these previous ones. Whoops. Like right here. And yeah, price just wanted to go higher. Again, remember we had these 4-hour gaps above. There was this one, and also right in here was a 4-hour gap that I chose not to mark up because we were already in it. So price was just ranging this whole time. You can see we're just trending. And so that's why I chose to take that long. It looked something like this, right? So I got filled on the 1 minute break, targeting. I was just going for a long. My stop was below, somewhere in here, somewhere. It was probably on this wick right here, and on the higher time frame, I was targeting right. So over here. We have this draw right here. And there's also like the 4-hour gap. Oops. Okay. So we can see that price is just slowly grinding up to aim towards those. And then further on, we want to understand our risk for the day. We don't want to over leverage. We don't want to gamble. We don't want to just hope that everything plays out for our evals, because if they don't, that's a big bummer and that's a loss in our bank account. Right? We always want to be patient each day and go for base hits. Even myself, I will over leverage sometimes, and the second I do that, I'm like, what the hell am I doing? And so I try to remind myself every morning to go for base hits. I have, these notes I go over to try to get my mind in the right, mindset, I guess. But again, you can always go back to the higher time frames of where's price wanting to go. If we retrace down here on the 15-minute, obviously we're going to be more bearish. On the 5-minute, right here, we wanted to retrace down to this 5-minute, but all we did was come back down to this draw right here, have a little sweep, and you can see price wants to push back up. Again, when I took my trades this morning, it was in this area. So all we did was come up to London high, push a little bit more. Buyers and sellers were at a disagreement, and then we tapped back into there was a 1 minute gap in here. and then we pushed higher. So it's a play on our buyers more in control, our sellers more in control. Whereas the draws, we want to have a higher time frame narrative, and then we can slowly go down to the lower time frame to find an entry. We can see shorts are playing out right now. There was a gap right here that sellers took out to lower, but we came into this area right here where there was two stacked bullish gaps, which is why we bounced off of that to higher, which ultimately stopped those people out. And then when we stopped those people out, that's when this second gap right here started to play out. Right here for lower, which is how this draw got taken up. And that would have been something like this. Stops at either this high or this previous one right here, targeting the low. And again, this is on the 1 minute. You could do the 5 minute, 2 or 3, whatever. But yeah, just staying patient and not forcing anything, not rushing. We want to go for base hits. Personally, I like to go for a 1-to-1 or a 1-to-2 if possible, risking $200 to $300. That way, for my PA accounts, I can get my winning day in. And if price wants to run, that's great too. So, for instance, over on my X account, you can see I got a $600 day. That's because I was able to, move my profit. I was trailing my profit, and it just worked out. Over on my eval accounts, it was a $1,400 day. This one was $1,700 because there was an accidental trade. But yeah, $1,400 trade, 2 trades. Even smaller days, like over here on my PA accounts, I have a $195 day. Nothing crazy. I don't want $189, $200, $300. It's not a lot, but it's enough to get me that winning day, which allows me to take a payout. $150 or more counts towards a winning day for a payout, and that's all you need to become profitable, right? You don't need to risk a lot. You don't need to make a lot. Consistency is key. Finding your draws and liquidity, having patience to wait for your setup to play out, understanding price action, understanding your narrative and your bias from higher time frame to lower time frame, and yeah, just take your time. Don't over leverage. It's really just consistency and cutting out the bad habits early is what will get you there. Again, I'm just some random dude, but for instance, I have a few payouts right here for, I don't want to say for proof, but I can get a payout. So, but yeah, with all that being said, let's cut it here. If you have any questions or comments, let me know, please. I'm trying to help anyone who wants some help. So, yeah, again, I'm going to cut it here. So, leave your questions in the comments below, drop a like, subscribe, and I'll catch y'all in the next one.